Okay. Let me wait until we have it on the screen. It's not yet there. Okay, I think we are online now. Okay. Good night, everyone. Good night for those who are in Europe, and good afternoon for those who are in the North America or South America regions. I am Murat Yulek. I am the rector of Ostim Technical University. We are at the roundtable titled Covet and the World Economy. We will discuss critical issues today on how COVID is affecting the world economy today and what changes in the world economy COVID may bring in the future. We will look at different regions of the world. We will try to see if the worst is over in economic terms, how much economic damage is being caused by COVID in different areas such as unemployment, capital markets, economic growth, etc. And then again, we will look at how and what changes the COVID will bring to the world economy in the medium run, to the world run, to the long run. We have a very distinguished panel of speakers today. They will bring a wealth of knowledge and insight to us. Let me first introduce them in the alphabetical order before we start the panel. The first speaker will be Professor Gabriel Beschinski. He's an economist, specialized in development policies, industrial policies, innovation, and SMEs. He's a professor at National University of San Martin in Buenos Aires, Argentina. He's one of the leading specialists in public procurement in Latin America and is currently the academic coordinator and professor of the master's program in public procurement at UNSAM. That is the only program in that field in the region. And that's a field that we have cooperated with Gabriel before. He's a professor and researcher also at the School of Politics and Government, and is a member of Center for Research on Economic Development in South America. He has taught undergraduate as well as graduate classes in different universities, including University of Buenos Aires, National University of General Sarmiento, University of Bologna, and the Latin American Institute for Economic and Social Planning. And he has served as a consultant to international organizations such as the World Bank, Inter-American Development Bank, UNDP, ECLAC, etc. And his fields in these consultancies were different issues related to economic development and public policies. So welcome, Gabriel. The second speaker will be Reyhan Chaudhry. Reyhan is a very well-known banker and investment manager in North America. He is currently the CEO of Peak 15 Advisors, and he is a global investor in different sectors such as technology, real estate, and emerging energy. And his investments span Asia, Europe, of course, in addition to North America. Prior to, he was before a portfolio manager and principal at Altrinsic Global Advisors, which was a capital management company which managed $14 billion worth of assets. And prior to Altrinsic, he worked in different well-known companies such as Lazard Asset Management, Legg Mason, Morgan Stanley, and Booz Allen and Hamilton. He is currently also a fellow with the Global Federation of Competitiveness Councils, based in Washington, D.C. And of course, he is also a member of Ostim Technical University's International Advisory Board. My third speaker today will be Professor Travis Taylor. He's a professor of economics at Christopher Newport University, Virginia, and his research and teaching interests include the economics of contracting, international economic development, and public procurement. Again, an area that we collaborated with Travis before. A well-published economist, he is especially well known in the area called counter trade and offsets. At his university, CNU, he served as department chair of accounting, economic, and finance. And then he led efforts to create an independent economic degrees program within the same university in which he is right now. And Dr. Taylor has worked for the US government as an international economist. And he has been also a consultant for different firms in Singapore, Seoul, South Korea, and the USA. Okay, welcome again, Travis, Reyhan, Gabriel, and all our audience. I'm just at the same time looking at the number of audience, and it's increasing. Let's start now. We will have 2 rounds. Each speaker will have 15 to 20 minutes in the first round, and then 5 minutes in the second round. I will time you guys, and once everyone has spoken, I will start the Q&A session. And we will try to wrap this thing within, let's say, 1.5 to 2 hours, hopefully without losing our audience. Let's start with Gabriel. Gabriel, how do you see the global situation from Argentina? Of course, in particular, the Latin American circumstances, Argentina and the region. Where is the world heading towards? What effects might COVID have on Latin American as well as the world economy in the medium and long run? Okay, the floor is yours now.
Okay, thank you. Let me try to share with you my screen. I don't know if you can see the presentation now.
Now it is coming, yes. It's coming, not yet, but it is coming. Okay. It's coming all the way from Latin America, so we can wait. It's on the screen now, but now other things are coming. No, it was there. Now we see all your screen. Go back because it was there already.
Can you see it now?
Yeah, now it is there. Okay. Yes. And it's full screen now. Thank you.
Okay. Well, good afternoon and good night, everyone. First of all, let me thank Murat for his kind invitation to participate in this roundtable. I will try to present a vision from Latin America on the impact that COVID is having and those that are expected to have on the economies and societies of the region. I know many of the things that I will present will surely be common to other developing countries, although in the case of Latin America, they have some particular features that I will try to explain. The presentation is organized in 3 parts. First, the situation of Latin American economies before COVID. In the second place, the impact that the pandemic is having and will have in the region, and the measures that governments are implementing to cope with the pandemics. Finally, the future scenarios and the challenges for Latin America. Most of the data I will present comes from a report published by the Economic Commission for Latin America and the Caribbean a few days ago on this issue. First of all, it's important to note that before the onset of coronavirus, Latin American economies already were in a tough situation. Economic growth was the lowest in decades, as from the beginning of the 20th century. Indebtedness of Latin American countries grew 15 points between 2011 and 2019. The interest payments grew significantly at the expense of public investment and social expenses. The high level of private sector indebtedness limits the effects and the effectiveness of monetary policy. The trend towards poverty reduction that had been in place since the beginning of the century was reversed, and we witnessed an increase in the levels of poverty, and especially in extreme poverty in the recent years. And one of the characteristics of Latin American economies is the high level of informality. The International Labor Organization estimates that close to half the workforce of the region faces informal labor conditions. Almost all micro enterprises and many SMEs carry out their activities in partial or complete informality. And of course, this high level of informality has important effects in economic, fiscal, and social terms. Low productivity, lack of access of SMEs to credit, lower tax collection for the state, lack of health and pension coverage for workers. But how is COVID affecting Latin American countries? Well, this is a graph that Richard Baldwin published a few weeks ago, showing the impacts of COVID on the circular flow of income. And as you can see, it simultaneously affects supply and demand, both internal and external, and both private and public sectors. And this situation is generating short-term impacts and will generate others in the medium and long term. In the short term, we are witnessing higher unemployment and labor insecurity, lower salaries and income that further reduce consumption, increase in poverty and extreme poverty, higher cost of health systems, and access inequality. And in the medium and long run, there will surely be bankruptcies, low private investment, lower economic growth, disintegration of value chains, and weakening of productive capabilities. And the main transmission channels in Latin America are low growth in main commercial partners, slump in commodity prices, exports in Latin American countries are expected to fall around 15% this year due to the combined effects on volume and prices. And exports to China are expected to fall 25% this year, affecting mostly South American countries like Argentina, Brazil, Chile, Peru, and others. Sudden stop in tourism that strongly affects Caribbean countries, but also many Central and South American countries. The reduction of remittances by 15% this year. As you may know, many Central American and Caribbean countries rely heavily on remittances, mostly from citizens of those countries living in the US. The worsening of international financial conditions takes risk aversion, volatility, massive capital outflows, devaluation of most Latin American currencies, significant increase in sovereign risk. And these new conditions hits Latin American economies that, as I said before, are heavily indebted. And finally, the disruption of global value chains, as several countries in the region have important sectors of their economies that are inserted in global value chains in which the United States, Europe, or China have a central role. To try to contain these effects, the effects of the pandemic, Latin American governments are taking some different kind of measures, like travel restrictions, flight bans, border closures, social distancing, distance learning for the whole or part of the educational system, strengthening the health sector that is very weak in most Latin American countries, total of partial quarantine measures, protection of workforce and income, social protection measures. This type of measures have been very difficult to implement because many of the potential beneficiaries of those measures were not registered with the Social Security or had even a bank account. And several countries have implemented or reinforced direct food distribution programs, and also support to SMEs and other firms. The governments in Latin America also implemented some monetary and financial and fiscal measures, like assistance to financial institutions to avoid liquidity squeezes, reduction in legal reserve requirements, restructuring of loans, loan portfolios, and deferral of payments, more intervention in foreign exchange markets, in the fiscal area, flexibility to redirect public budgets, or deferral of taxes. The governments are implementing fiscal packages of up to 10% of GDP, in some cases, including state guarantees and bailouts, the preservation of productive capacity to ease economic recovery, especially for SMEs through liquidity provision and direct payment of wages in some cases, like in Argentina, for example. And as previously mentioned, indebtedness was already a serious problem for the region before COVID, but now the need for some type of debt relief, restructuring, and or forgiveness becomes pressing for all Latin American countries. Finally, although it's difficult to make forecasts, let me take a look at some future scenarios and the challenges that Latin America faces, taking into account that COVID is accelerating some trends that were already in place before. First of all, I think that the global economy will not return to normal, or what we meant by normal up to now. A recent report from Harvard University states that social distancing measures will continue at least until 2022. Production networks will continue to reshape as the US-China trade and technological war goes on, and a greater regionalization trend is likely to gain momentum. There's a trend of the acceleration of automation and digitalization of production and all kind of economic and social activities. I just mentioned this topic as I know that Rehan will develop it later in detail. And all these phenomena occur in a context of a weakening of multilateralism. And in order to adapt to this new scenario, Latin American countries need to develop regional value chains. But this requires smart industrial policies to achieve greater integration of production and technology. And here we have a lot to learn from our guest, Murat. It will also be necessary to reinforce the regional market of 600 million people, more than 600 million people. It's imperative to seriously address the problem of poverty and exclusion of a large part of Latin American societies. Some ideas are already installed in the public debate these days, such as that of universal basic income, and the need to strengthen and extend the coverage of the public health systems. And last but not least, a key question is who will pay the cost of the crisis and the transition to a new scenario. In some countries, as in the case of Argentina, the application of an extraordinary tax to the super rich people. In the case of Argentina, are just 12,000, is being discussed at the Congress. But the first reactions to this initiative have shown that a resistance of these sectors to contribute according to their wealth. And all these challenges are much more demanding, considering that the policies implemented by most Latin American countries in recent years have been contrary to the solutions required in the new scenario. So, well, that's all. Thank you very much.
Thank you, Gabriel. This was very, very comprehensive. And also thank you for being right on time. Your point of views, especially about the Latin American situation, where you said we know that in Latin America, a lot of countries are resource exporters, including Argentina, Brazil, etc. And of course, just like in the general commodity markets, we will have a problem. And then you gave a very comprehensive view about how the post-COVID world may look like. So, okay, thank you again. Now I turn the floor to Reyhan Chaudhry. He will look at it again from this time North American perspective, but also from an investor and banker's perspective. The floor is yours, Reyhan.
Well, thank you very much, Murat, for hosting the event. You know, I'm a great fan of your book, How Nations Succeed. I think one of the top 5 must-read books, and particularly relevant, as Dr. Bezczynski said, with regards to the current environment. So it's an honor to be on the panel. So basically, I will divide up the presentation maybe into 4 sections. The first one may be to look at how will COVID-19 evolve, its effect on our projections on its effect on the economy. And perhaps then the second one will be on social effects, social economic effects, which will then affect the economy itself. Then perhaps we'll do the third section to look at permanent changes due to COVID-19 long term. And then let's look at investment opportunities, perhaps on how one can actually make returns during this quite troubled time. So, you know, just looking at COVID-19, there is a report by Dr. Kleitman, one of the leading epidemiologists, who discusses the second and third waves. So as we open up the economy and in quarantine, we just should have a
Reyhan, are you going to use a presentation?
I will use a presentation for the second and third sections, but not for Dr.
Okay, okay, fine.
Yeah. But for the students watching, I think that's one, if you could have that downloaded from the website. I think it's a highly articulate view of how in the 1918 pandemic, the second wave actually had far more fatalities than the first wave. And particularly here in the United States, we are more vulnerable given that we have 50 independent states and the coordination is not as strong as a centralized government approach. So the key ways to tackle COVID-19 will be to isolate the elderly and the vulnerable, because there does seem to be an age component of it. The second one is to test aggressively and comprehensively. The problems that we have right now with COVID-19 is that testing is inaccurate, and we have quite a few false positives and false negatives. Probably within the next 6 weeks, we will have new technology emanating from Korea, which is cancer technology readjusted by an entrepreneur, Mr. Hong, who is now probably will have 99.5% accuracy for COVID-19. So the testing is improving significantly. There will be a phased opening, but social distancing, as Dr. Bezczynski mentioned, will remain in some element or some form as we go through second and third waves of COVID-19. And then the key will be to continually test and retest until we get a vaccine. In discussions with Dr. Kasper Basinger, it seems as though the vaccine at the earliest will be 18 months away. So we have an 18 to 24 month period where we are stuck in a situation where the economy can slowly perhaps have fits and starts, but due to the structure of COVID-19 and social distancing and the mass unemployment that's being generated, we will go through some very difficult times. So I do want to maybe pull up my presentation now and highlight a few of the long-term trends that will take effect. And then we'll go into the economics of those trends and then go into the investment opportunities that we're seeing. I think my screen is kind of frozen. Hang it. Just, okay. Dr. Eula, can you see my screen? Dr. Eula, can you see?
Yes, it's on screen now. Yeah.
Okay. So why don't we just highlight a few trends?
Yes. Yes.
Yeah, as Dr. Bezczynski mentioned, there are some trends that were in place that are now being accelerated because of COVID-19. So some of the predictions that we had for perhaps over the next decade will now take place over the next 3 to 5 years very aggressively. The one thing I do want to explore is the demographics of the condition and of the emerging markets. Although the world population is aging, countries like Turkey, South Asia, Latin America, and Africa actually indeed have a very young population. So the prospect of, given that this condition does disproportionately affect the elderly, there is actually a positive for the emerging markets that we can get back towards more semi-functional economies and more what's called herd immunity, where we get the condition, but young people are more likely to be asymptomatic, and therefore they can get back to work, which is very important because otherwise we are going into a Great Depression scenario. So that is one thing I do want to point out here. The second negative aspect of the global world economy is that wealth was already being concentrated. So if we look at that bottom right-hand chart, global wealth, you can see in 2000, the top 1% of the world's wealth had 32%. By 2016, it was 50%. Now, the economic policies and fiscal policies that Dr. Taylor will discuss after my presentation indicate a significant amount of monetary stimulus and fiscal stimulus. Now, this will again, like in the last cycle, prop up financial assets, making the wealthy even more wealthy. And so what's happening is as the wealthy become more wealthy, the poor are unemployed. So the gap between the rich and the poor is becoming so wide that it is getting towards dangerous levels. We were already back to the 1920s and 30s, where the Gini coefficient and the differential between rich and poor was at a point when we began to get very social extreme situations that was predecessor towards World War II. Now, I do believe that the social disruption factor will rise. The two greatest indicators of social disruption within a country are wealth differentials and unemployment. So in the past, we could target certain countries saying that these countries will be high risk due to unemployment. But now that unemployment is a global phenomenon, we believe that conflict will no longer be between countries, however, will be within a country. The conflict is between the wealthy and the rest of the population, and between the young and the old. The young will argue that they have lost their jobs, they need to work, they're less prone to the condition, and they will want to open up the economies faster. So we can see significant amounts of perhaps demonstrations and volatility within countries versus the previous 30 years when it was between countries. And as Dr. Bezczynski mentioned, the probability of a wealth tax is there. So there will be some effects of trying to bring back an equilibrium in the wealth equation. So as we look through COVID-19 over the next 2 to 3 years, we can expect significant social volatility, and that has its impacts on the global investment landscape. And this is exacerbated by the fact that housing was extremely expensive to begin with, and now many young people will find it unaffordable towards urbanization. The trend towards urbanization, we feel, which was a 30-year trend, may start to reverse itself because as people have now experienced, living in congested urban areas can become very difficult when you're forced into a quarantine situation, and it is very expensive. So we'll see more of a distribution as countries set policies to set up new mini cities and satellite cities away from the key urban areas. So the prospect of de-urbanization or re-urbanization of the suburbs will become a prominent factor. So this trend here about urbanization could start to become a little bit more easing off during the next three to 4 years. A few other quick areas I'm going to point out is the climate as well. Food security is becoming an increasing issue. As you saw, meat plants were being shut down in the US, and even there's reports in Turkey, Brazil, South Africa of meat plants being shut down due to COVID-19 and infections among workers and possible transference onto the product. So the agricultural area is facing significant supply side disruptions. And as Dr. Bezczynski mentioned, the globalization trend will reverse back towards a nationalistic and anti-globalization trend, not only for food, but also for the supply chain that we'll go over a bit later. And as climate change starts to continue to kick in, it'll affect the emerging markets worse, and food scarcity and food scarcity supply will be prominent in the mind of governments. Some positives, but the renewable energy trend, which was extraordinarily positive over the past decade, may come to a slight halt because of the price of oil is so low, and that could actually kind of displace some of the trend in that area. Over the long term, we are still believers in renewable energy. The other area we do want to discuss is the rise in artificial intelligence. As we are now forced to work from home, we're generating far more amounts of data. This will require a lot more AI, so AI investments will accelerate. AI has a positive aspect to it for enhancing productivity, but it also has a negative aspect to it where we have invested so much in technology at the expense of technology capital, at the expense of labor. And now that labor is abundant and companies have invested so much in technology, they may rely on structures permanently, or at least for the next 5 years, to get a return on investment on their technology. Abundant. Companies have invested so much in technology. Pardon? I apologize. I didn't catch the question, please. So, in addition to the revolution of IoT devices, and one of our partner groups is prominent here, based out of Texas, IoT will accelerate. One of our partner groups as well is prominent here. So, if we do look at the long-term trends here on page number 18, you can see that there are some negative trends of income equality, climate change, and automation, artificial intelligence that may perhaps persist in having higher unemployment rates for longer. So this economic recovery will not be V-shaped. It will probably have fits and starts. We've seen this in China, where once the economy is back on stream, consumer behavior changed, but also the fact that other countries are not purchasing product as much and consumption has declined significantly. It'll take some time for that to come back. But if jobs are not present and not present very rapidly, then there's a permanent impairment. There are some negative trends of income equality, climate change, and automation, artificial intelligence that may perhaps persist in having higher unemployment rates for longer. So this economic recovery will not be V-shaped. It will probably have. We've seen this in China, where once the economy is back on stream. And then the positive trends will be more for...
Reyhan, you have 5 minutes.
Okay, so let me put the presentation back down and do the stop screen. Sorry, there's a bit of feedback. So just some permanent effects will be food security. Tourism has basically been wiped out around the world. The banking system, I do maintain, will have so many non-performing loans that equity issuance will be required. The shared economy will grow. So the winners of the past decade in technology that enable shared economy and shared resources will become very important. Real estate will reconfigure itself. We've already seen companies try to pull back on commercial real estate because of now that most of their workers, if they have workers to the same level as they had pre-COVID, are mainly working from home. So when we do look at the investment priorities, which I'll go over very quickly, AI, automation, and social networking, NASDAQ is already back up towards the pre-COVID highs. So it's hard to make big allocations to that sector. We do believe that the market will be a sideways market and a volatile market. So if you look at the Great Depression, it took almost 25 years for the stock market to come back to the 1927 levels. We don't think that will be the case because unlike the Great Depression, we've had massive economic, fiscal, and monetary stimulus, but it will be a sideways and volatile market. In these types of markets, what works best is profitable companies with strong balance sheets. We saw this in the 1990s in the Japanese bear market. But in between, in bear markets, there do tend to be very strong jumps or bear market rallies of over 40%, as we saw in Japan. And this is when lower valued companies do tend to outperform. So one has to be aware and somewhat more nimble as these markets will become more trading markets. One area I do want to point out is that small cap stocks have been devastated around the world. Any benchmark, we look at small cap stocks, they're significantly out of favor. So what particularly I'm doing is screening for strong balance sheet companies, sustainable businesses with low market caps that can either be purchased entirely or one can take a stake in from an activist approach to kind of make these more optimal from either a financial structure or corporate structure. The fourth area we're looking at is distressed real estate, because this cycle will be so bad, there'll be incredible opportunities there. And then the fifth area, I'll end the presentation here and I'll leave questions later, is for precious metals. And if we look at Dr. Taylor's presentation that he's about to do, if you look at the monetary stimulus is so extreme that we believe that we're close to coming to a super cycle for the precious metals, gold, silver, and platinum. So thank you, Murat.
Okay, thank you very much, Reyhan. This was a very good cover-up about capital markets, asset markets, even not only the investment aspects, but distribution aspects, including how the assets and wealth is being distributed, how artificial intelligence might be an issue in the future. Thank you very much for all the insights. I am receiving, as everybody can see, a lot of questions, but I will keep them for the question and answer. Meanwhile, the speakers can look at those questions in the YouTube channel. So this will prepare us for question and answer session. Now let me turn to Virginia, Dr. Travis Taylor. So Travis, how do you take it? How do you see it from your side? Can you speak from, again, maybe the North American perspective?
Absolutely. Thank you, everybody. I really appreciate the opportunity to talk today. This is such a wonderful panel organized by Dr. Ulick. And I noted from the first two presentations, wonderful presentations from my colleagues, that we have some good complementarity here among the topics. So I hope the audience finds that useful. What I want to talk about today is perhaps looking in my crystal ball, if you will, like we're all trying to do, in how might COVID shape bigger paradigm shifts within the economics profession. So there's been so much news and so much data coming out on a day-to-day basis. I decided for this presentation, for this short talk, I might focus on some key takeaways for what we're thinking about within the halls of academia and in economic policy circles. So let me see if I can share my screen. Let's see. And I also wanted to give a special shout out to Ostim Technical University. Thank you for hosting this wonderful event. And I had the good fortune to host Dr. Ulick here at Christopher Newport University in Virginia about a year ago, walking on our campus. And although I can't walk on his campus today, I'm so thankful and grateful that we can all meet together virtually. So appreciate that. Maybe one day in the future, I'll come across the other side of the Atlantic. Let me see if I can share my screen. Let's see here. Just a second. Okay. Murat, can you see the screen?
Yes, perfectly,
Okay.
but just transit to the full screen version will be better.
Okay.
Or keep it like this just in case. Okay, excellent.
Very good. So in the allotted time, and since I don't see the chat comments, Murat, so please, if I go on to the 15-minute mark or whatever, just go ahead and give me a shout out and warn me about the time limit here. So 5 ways COVID-19 may alter economic thinking in the future. So what are we thinking about in the halls of academia and public policy circles? The first thing that came to mind, and it was touched upon nicely by the first 2 presentations of my colleagues, is the question of, I like to call it Wither Ricardo, right? So folks in the audience, if you don't have too much economic background, David Ricardo was one of the first very important economists who developed the theory of comparative advantage. That is, countries and individuals should specialize what we're relatively better at, right? And have that division of labor and ultimately export that type of good and import the goods that we don't have comparative advantage. When we look at the effects of COVID-19, we note what's in the news, probably in your country, certainly here in North America, in the United States, widespread reports of insufficient protective equipment. This has been a real tragedy, particularly for a country like the United States, one of the richest countries in the world. Yet you see on the nightly news that hospitals, support staff, doctors, nurses, and the like, forget about even the individual citizenry. We didn't have enough masks. We didn't have enough protective equipment. It called into question the lack of domestic production capability and capacity. There's also some studies that have looked at the types of antibiotics and medicinals that we might find helpful in combating these types of sicknesses. And at least for certain types of antibiotics, for example, 80 to 90% of them were actually being manufactured in China and imported into the United States from China. So this has raised, for obvious reasons, quite the red flag in terms of supply chain networks and the ability for basic ability to function within the global marketplace during times of pandemic and economic trauma. What else? Well, there's been, I think, unless one has been living under a stone, everyone's aware of broken supply chains and ensuing trade disruptions. This has happened, and this will continue to happen even as China reportedly has opened up and is back in at least initial stages of production within the factory network. But as economists know, and my management colleagues know, all too well, you know, the global supply chain is so interconnected that if you have some sort of a bottleneck in one segment, right, one part of the automobile or the phone, right, or the protective equipment, then it's going to reveal itself in disruptions down the stream, down the chain. So this is a concern. So broadly speaking, this speaks to rising concerns that specialization and division of labor have perhaps gone too far. You know, my summary from this slide would be, hey, might we consider a possible decline in the appeal of Ricardian neoclassical comparative advantage? My friends in industrial policy, like Dr. Ulick and Gabriel, we're certainly aware in industrial policy circles that sometimes on occasion, right, we might depart from classic Ricardian comparative advantage for, you know, a developing country en route to moving up the trajectory of development. Sometimes we depart from that neoclassical comparative advantage to create new comparative advantage. And my sense is that there will be more broad appeal for this type of national movement. Now, it's a whole other can of worms, so I'm not going to go in this direction. But generally speaking, the United States has never been a real big fan publicly of national industrial policy. We have had lots and lots of examples of industrial policy and ad hoc industrial policy, as one can read in the book that was cited earlier by Rehan and others. But I see this moving in this general direction. The second point that economists are talking about and thinking about in policy circles and in academia and government would be, you know, for all too often, the neoclassical model of economics has oftentimes pushed aside and added as a chapter, but not a main point of emphasis, the notion of externalities. And an externality is some sort of a third-party effect, right? Like pollution, like acid rain, where somebody downstream or downstate or another country is ultimately affected by the actions of other parties. And so it's really come to the fore, though, in a very, very severe, acute way when we talk about rising temperatures, environmental concerns, that really, we just passed Earth Day, right? And so the Earth Day folks were obviously sad because they had planned all sorts of events for Earth Day to continue to press politicians and policymakers to take the spillover and externality issues more seriously. Now we can add another type of spillover to this discussion, and that would be the importance of better understanding and better policy coordination in regards to medical pandemics. So in a world where you have these types of spillovers, and then you add in globalization of supply chains, of people, of, you know, just in the past 100 years, the incredible increases in technological efficiency of travel, okay? And then you add in high transaction costs, right? Where normally, right, according to Coasian theory of social costs, that you would have private bargaining solutions. My sense is that with these types of pandemics and these types of, right, global environmental concerns, these are such high transaction costs that the normal Coasian private sector responses won't work particularly well because of nonlinearities of the cost functions. And so you're going to have these broad systemic effects calling for increased intergovernmental policy coordination. It's ironic that America's current president, Trump, has tried to move in the opposite direction. So Trump has taken America out of a number of these environmental protocols and intergovernmental policy coordinations. It's ironic that that was happening even prior to the current pandemic. The third point that I'd like to talk about today would be my question would be, is there a rise of modern monetary theory, right? Could COVID-19 increase the relevance in policy circles, theoretical discussions among economists of MMT? So as my next slide is about MMT, but briefly, most scholars agree that governments must run sizable deficits in the short run to fight a war or a pandemic like COVID-19. So I think everybody, more or less from the data that I've seen, most countries around the world are taking active steps, jacking up government spending, certainly in the United States, greatly increasing money supply and the Fed balance sheet. So if you actually look at this graph, while there was government spending creep, that is increases in government spending as a percentage of GDP, when you look at the colored lines together, you see the huge spike in during World War II and also during World War I. But there's generally, right, been that upward trajectory of government spending as a percentage of GDP. When we add in the most recent numbers from COVID-19 and the government response, it's called USA Cares. So the USA Cares Act that was recently passed by Congress already is well over $2 trillion. So, you know, just to give you some sense for the listener or for our viewers today of context, already, and there's more to come in the United States, but already that is about three times as big as the response to the Great Recession in 2008, 2009. So there's been a massive increase in fiscal policy and the Fed's balance sheet. So on this slide, you can see the significant structural break in the data and the rise in assets. This is basically like you might have heard from 2008, 2009 in the United States. The central bank was buying a lot of assets in hopes of helping to improve liquidity, right, and open up the financial markets again. This is kind of like that on steroids. So you can think of that 2007 to 2009 period, very active quantitative easing on the part of the central bank in the United States. And this is really unprecedented, as you can see the spike up in the just the early response to COVID-19. So to finish off my point here with MMT, if you're not familiar with it, this is a new type of it. Well, it's new, but it's based on a lot of older economic writing by people such as Abba Lerner and company. But it's the idea that we shouldn't worry as much about government deficits and debt, particularly in times of crises. It's not that important if a country is able to have its own currency and run the printing presses. And you can certainly see in the United States, at least, and probably many countries around the world, we have been running the printing presses. The concern before was always, hey, is that going to cause inflation and rising inflation concerns and expectations built into labor contracts and so forth. So you get a spiraling upward. But we've been, really since 2008, we've been living in this different environment where the Fed has oftentimes been more concerned about not reaching sufficient 1.5% inflation to 2% inflation. So it was concerns more about deflation or disinflation rather than inflation. So this theory of modern monetary theory has gained some credence recently from policymakers on the left arguing that that we shouldn't worry as much about deficits, and we should increase social safety net spending. And so, if anything, I would argue that this COVID-19 is going to increase momentum for MMT, even though MMT itself doesn't have a strong theoretical foundation that's really well developed in macroeconomic theory. There's one new textbook that came out fairly recently, but there's just not been a lot. And of course, folks like at the University of Chicago reject it outright. Point number 4, can industrial policy help? Yes, I'll keep this brief because I know my friends have already talked about this today, but yes, it can help. COVID has exposed massive shortcomings in several strategic industries for many countries. When we talk about industrial policy, in the end, it is taxpayer money. It is coming from citizens' contributions to the government. So we don't want to have just some sort of poorly constructed, haphazard industrial policy. It has to be well crafted. It has to be well audited. And there really should be significant spillovers. So if you look at areas such as public health, infrastructure, domestic production of essential PPE, these are areas where we have shortcomings in the global supply chain. So we have shortcomings anyway. So for national security concerns, you can make an argument for some sort of industrial policy in that regard. But also I want to point out that studies that have looked at rates of return in these areas, the rate of return on investment in these areas typically is relatively high, right? So $1 invested in these types of industries actually returns well more than $1, and oftentimes more than other types of industries. So my summary statement here would be a carefully crafted and audited industrial policy can alter relative prices to incentivize private sector participation in these critical domains. It could help with unemployment too. And anybody who wants to read more about this, I highly recommend Dr. Ulick's book about this. And then my last slide today would be wanting to bring awareness to the rest of the world. If you're watching today from all in different parts of the world, I'd speak to America in particular, what we have going on in America regarding our citizenry and the chasm and political polarization of the current environment in the United States. You may have seen on the news that the United States already has a polarized political system. And I would argue that we may face increased pressure from both sides after maybe this temporary reprieve, because oftentimes, right, war, whether as President Trump has called it, an invisible enemy with this COVID-19 war or pandemics, they oftentimes increase the resiliency of the people and provide certain amounts of solidarity among the people, and so people come together. But I would be very concerned in the United States how the political system and our citizenry, adapt to the new world moving forward. As I've pointed out, we already have, and we will continue to see increasing government spending to GDP ratios. And there's all sorts of talk about perceived attack on individual freedoms. It's unclear how this plays out. The East Asian tracing programs, however successful they have been in places like South Korea, Taiwan, Hong Kong, China, certainly, these somewhat heavy-handed attempts, particularly in China, heavy-handed attempts to track people via GPS, contract tracing, internal antibody tests. I'm just not sure how that's going to work in a country like the United States. The contract tracing, though, I would mention in a place like South Korea, there's been a lot more buy-in among the population. So instead of more of the authoritarian approach of, say, China, a country like South Korea has had more citizenry buy-in about the importance of the masks, of the shelter in place. So in fact, a lot of the restaurants in Korea actually didn't close. So folks could still go into the restaurants, but they were just very careful. They wore masks religiously. We didn't know about the masks, at least among the public policy in the United States. We didn't have masks on until just the last couple weeks. So that was a significant difference, and partly based on probably, right, cultural factors, Confucian background, but also some of the East Asian countries had experience of going through SARS in the early 2000s compared to the United States. So thanks so much for your attention, and I'll be happy to take any questions.
Thank you, Travis. This was also very illuminating, and you gave a lot of messages. I don't want to summarize them, but some of the things that was very interesting to me was you argue that Ricardo will be more out than before. There will be a lot of pressure on the government budgets because of the expenditure hikes. And then you also underlined, like the other speakers, the unprecedented policy response of the central banks, in addition to Ministry of Finance. Now, what I will do, we are very successful actually in terms of time. So now we will have the second round, 5 minutes each with the same order. Meanwhile, we are receiving a lot of comments and questions on the side. So to the speakers, please, while one of you are speaking, the rest you can also check if there are questions that are addressed to your ideas. But anyway, I will go over them anyway during the question and answer session. So now I go back for the final remarks in 5 minutes. Gabriel, Gabriel, what do you have to say after listening to others?
Well, thank you. Both speakers were very inspiring, and I just wanted to stress some points to give a more, let's say, fine-tuned approach to Latin America. As I gave maybe homogeneous vision of the region as a whole, but there are very different situations inside the region, and different approaches to cope with the pandemic, in line with what Travis mentioned recently, and perhaps you have different approaches, like the one in Argentina, for example, where the government acted quickly, favoring health over the economy, and the results have been very encouraging regarding the contagion curve and the number of deaths. But you have also other cases like Ecuador, where the health system was overwhelmed because the government reacted very late. Or the case of Brazil, where the president continues to call to disobey the quarantine that various governors have established. And in both cases, the growth of the infected people and of dead people has been exponential. So you have also different approaches here in the region. And well, as you may know, in South America, we are just beginning the fall, and we have the winter ahead, when respiratory diseases are more common and widespread. So we have an additional challenge ahead, because we are here in the region, the spread of coronavirus started very in a very delayed related to the central countries. And the last point I wanted to make is regards to the role of the state. I think that the state has to play a much more decisive role in many areas, as Travis mentioned. And industrial policy must be at the center of this new role of the state. Of course, industrial policy in the broad sense, like you, Murat, consider smart industrial policy. Well, that are the points I wanted to make.
Okay, thank you very much. So let me go to Reyhan now and listen to him. Reyhan, the floor is yours.
Okay, thank you, Dr. Murat. I believe what Dr. Taylor and Dr. Bezczynski outlined reinforce the financial investment view that I projected. With intense monetary policy, with so much money being printed, we have to look at hard assets. And given that commodities and precious metals have been out of favor for a decade, although gold has rebounded, but other precious metals like silver and platinum, which have an industrial aspect to have not, we think that that's a place where one should have a significant allocation to. Now, there are countries within Latin America that are very rich in such reserves, Mexico, Peru, Guyana, Brazil, Chile. So I don't want to say that everything is negative. There is a positive sector there to make significant amounts of money. The view that this is a long, drawn out process, and we had an 11-year bull market in the U.S. stock market, and we're now back at the high because of a few large cap stocks, I think makes the market very vulnerable. So this long only approach, I think, is going to be should be supplanted by an area where one can hedge or trade more effectively. But there are aspects of companies that do well, which are sustainable returns and good balance sheets. Anything with a bad balance sheet in this rebound, I'd recommend that one has to exit out of those areas. And then the small cap area, which has been devastated, I think incredible opportunities for activism there. And the distressed real estate will be so prevalent. This is a lifetime opportunity to pick up real estate within particularly the tourism area, hotels, in this whole area, which is being devastated, but it's a great place to deploy capital. So everything that the two professors said, we echo my view towards asset allocation.
Okay, so that was that an investment advice?
No, that's just what I'm doing with my own portfolio. I'm retired. So.
Okay. But I think this kind of investment would really help COVID destroyed values, because then if investment goes back to those areas, then you know, the previous investors will recover some of their losses at least. So it's a good advice economically as well. Okay, Travis, do you want to add anything?
I just wanted to follow up and say that one person, I think on the comments, Dr. Omar Jah asked about the time frame and whether some of our ideas and forecasts about the future depend, to what extent did it depend upon the current COVID, and that's really, isn't that the multi-million dollar, billion-dollar question? I don't think anyone knows, although, you know, I'd like to ask my friend Rehan the market response. Are markets basically pricing in a vaccine in a 12-month period? Is that kind of priced in at this point?
The markets are highly optimistic compared to where the economy will go, for sure. So it's actually at a very dangerous level. But this is but you have to see the market is dissected into many layers. The large cap U.S. market is, yes, overvalued. But if you look at the Russell 2000, there's incredible value. We've run a screen of something called, which was done during the Great Depression. It's called a Graham net, where the market cap trades below the cash on the balance sheet. And right now, on a global basis, there's now 80 companies that trade there. So for us, that's a very happy hunting ground to look for investments, to break up these companies and to take out the cash or redeploy it properly. But it's almost like I would say the no-brainer investment. This is how Mr. Graham had made his money during the Great Depression. He just bought these and held them for 30 years and became a legend in investing. So we have to open our history textbooks a little bit, which I think Dr. Ulick is way beyond qualified compared to myself. So I'm going to ask him for investment advice.
Thank you. And my other comment.
Okay, Travis, you want to
and then we can certainly open it up. But I don't know to what extent the current fiscal and monetary policy response in the United States. I don't know to what extent that can be replicated in, for example, less developed countries, countries that have relatively weak currencies. That's a whole other topic, but most of the mainstream press, at least in the West, has focused on, of course, big, major OECD countries and OECD responses in those countries that have established regimes, countries where international investors are always jumping at the opportunity to buy securities in those countries. Famously, right, the United States government has never defaulted on these types of securities. The U.S. benefits from being the reserve currency of the world. And so as an international economist and as folks, right, and some of the panel members, I'd love to hear from other panel members, if you're concerned, if we have another year or so before a vaccine and we're going to get these flare-ups, right? I think, Rehan, you referenced some of the top medical expert opinions that, we might be dealing with flare-ups at least for another year, 18 months. And so to what extent are these types of government responses that in some regards have been admirable. To what extent are they sustainable, not just in the advanced countries, but also my concern is about the poor developing countries.
Thank you, Travis, Gabriel, Reyhan. What I will do now is let's start the question and answer session. We have quite a few comments. Some of them are just congrats type of messages, but quite a few of them in the YouTube. So I'll just try to go over as much as I can. First of all, we have actually geographically also quite a few audience, because I have Anurag Jain. I guess he's from India. He made some remarks, and Luke Boyle from Ireland. Skandana Chaudhry congratulates us from, I assume, from Bangladesh. There is a Cyrillic name I cannot read, unfortunately. Could be something like Cennet, the name, if I'm reading rightly. And Ahmet Yücel from Turkey congratulating us. Uma Abdildayeva, I think he or she should be from Kazakhstan, maybe. And Harun Ünal from Asma Köprü, Mehmet Yülek and Abu Bekir Fethi, I presume from Bangladesh, Muhsin Kılıç and Uma, Kyrgyzstan. So Uma Abdildayeva from Kyrgyzstan congratulates from Kyrgyz State University of Construction, Transport and Agriculture. King Z, from which country I don't know. And Ömer Jah, the person Travis Taylor just referred to, was the rector of Islamic University of Technology in Bangladesh. And he has a few questions. Orhan Aydın, the chairman of OSTİM, and Yusuf Kalyoncuoğlu congratulates. And the first question from Luke Boyle: will this pandemic make governments look at how they operate differently in the face of possible future pandemics, i.e., look at reducing the reliance on importing, etc., focus on their own markets? This relates partly to the industrial policy discussion that Gabriel and Travis has mentioned, but on the other hand, it relates to a completely different question that I was having in mind. So I'll just mention it very briefly. Not in the economics literature, but in the political science literature, they talk about failed states. You know what I mean. Now, reading what is happening in different parts of the world, different parts of the developed world, I'm talking about Europe, even the US. Some of the pictures that I see in CNN, the way the health institutions are able or not able to meet the growing demand. In England today, in another meeting, someone was telling me from London that the doctors went on strike because they didn't have gowns provided to them by the ministry. So looking at those things, it brought to my mind this political science discussion about failed state. A failed state is a state that cannot, let's say, deliver some of the basic services, public services that it is supposed to provide. So Luke's question, let me just repeat it again. Will this pandemic make the governments look at how they are operating differently in the face of a possible future pandemic, i.e., look at reducing their reliance on importing, etc.? So we can extend this question to the area of public services. So this I'm putting on the table and proceeding. Hasibe Aysan from Ostim Technical University, Ahmet Uludağ from our university again, Gökhan Özgüven, Imran Chaudhry, just let's say congratulating, And Shirley Lambert, no question, but just joined. So the next one is Mehmet Çelik from Turkey. 2 questions. Economic and the social effect of COVID. Is the trend of globalization over? And this question is asked by other audience as well. Do developing countries switch to capital controls due to foreign exchange outflow? So 2 things here. Is the globalization over? We discussed this a little bit, but you may give more insight. And the second is, maybe this is for Reyhan, in emerging countries, is there a news or a risk of capital controls? Given we know that from emerging countries, there has been quite a few amount of repatriation of capital back to US, and the dollar index went up, and the currencies in some of the developing countries were devalued, etc. So this is related to that. Halim Sırçancı from Turkey congratulates. Fevzi Gökalp, Gökhan Özgüven, Ahmet Yücel congratulates. King Z from Kyrgyzstan congratulates. Luke Boyle, another question, the same question: will globalization be halted, reduced, as economies will have to focus in their own countries in the face of global pandemics? Esra Demirci, Ostim, and Ömer Jah again, he thanks. And Mehabat Karagulova, I guess from, I don't know, Kazakhstan maybe. And she says the coronavirus pandemic has put unprecedented pressure on the global economy. And then Luke Boyle again, he says, are government bailouts inevitable? So this is an important question. So the central banks and fiscal policy, Keynesian policies are full steam. Luke is asking if bailouts will come, whether they will be needed, and whether they will be undertaken. And actually, Gabriel has mentioned that there will be a lot of bankruptcies. So this he may maybe discuss this. Abdullah Çörtü asks, what is the role of China on global supply chain? Will it be going at the same extent as before Corona? I may extend this question. What will be the role of China after COVID? Will it be the workshop of the world as before Corona, or less trade or different policies in the Western world will change the role and function of China in the world economy? Then Luke Boyle again, I feel countries will look at other alternatives to China after this, especially France and Germany. They are not happy at all with China. And again, Cyrillic name, Samsun, if I'm reading the Cyrillic alphabet rightly. And Isa Top congratulates. From Macedonia, Classic Borkata congratulates. Faye Chaudhry is congratulating, maybe Reyhan. And Kayacan Ural from Turkey.
Murat,
he asks,
would you like to maybe outline some of the big questions for the sake of time, so we can answer some of the large questions that are outstanding?
Okay. What? Actually, I'm just naming the questions, but basically until now there are 2 or 3 questions. Maybe we can get to the answers and then I will continue. Just for the sake of order, Gabriel, do you want to answer any of those questions that I have enunciated?
Yes.
Globalization, the fiscal policies, China.
Well, you mentioned one question about state capacity to act in future situations like this one. I hope so, but I'm not really optimistic because, especially in the case of Latin American countries, because in general, there's a lack of capacity of state capacity in these countries, and to strengthen this capacity would require stronger international cooperation that I'm not seeing now. So I'm not very optimistic about this. As regards bankruptcies and bailouts, well, in Latin America, governments are, and in other countries as well, governments are trying to preserve firms and productive capacities in their economies, but as Travis mentioned, the key question is how sustainable is this effort if the pandemics will last a year or more. So that's we can't answer that now.
Murat, we didn't hear your question.
Can't hear you.
Are you on mute?
On China, the globalization, how will it proceed? More government role, and what about the role of China?
Murat, may I discuss your question?
Yeah, again, there were a few questions, basically whether globalization will proceed as fast as before, or will it totally reverse itself after COVID?
Well, I think
that was one thing. The other was the role of governments and the role of China in the global economy.
Maybe if I could just answer the first and third question. In terms of globalization, the reverse was already taking place. If you look at President Trump's policies for trade wars and raising tariffs, this has been in place now for 4 years. So COVID-19 will increase this because of all the bottlenecks in the supply chain have made it apparent that we can't be as interdependent. So that will come back to the local economies. On top of that, there is a socio-economic phenomena of increased xenophobia. Increased xenophobia also takes place when you have significant unemployment. I mean, I just want to remind that in the 1920s elections, the Nazis got less than 3% of the vote. When unemployment went to 30%, in the 1930s, they got 30% of the vote. So the extremist view of nationalism and anti-globalism tends to rise during the devastating effects of the unemployment factor, as well as the banking system not being solvent in large parts of the world. So anti-globalization is now the trend and will remain so for the foreseeable future. As long as we have high unemployment, there will be a need to set up effective tariffs and barriers to generate domestic employment, even if that results in higher inflation, which you know. And so if that's combined with food inflation, inflation is the one thing that nobody is discussing. Everyone is discussing disinflation and deflation. And normally when you do have such high unemployment and such a large investment in technology, one should have that. But if it's offset by the factors of tariffs and increased local production, and then also a collapse in certain areas in the food chain, then one could see an inflation cycle that is completely unexpected by the market.
Okay. I wish there was someone from Western Europe among the speakers, because as you said, as unemployment and worse economic situations progress in Europe, also the extremism and racism and those political movements really go up in different regions, in different countries. We all see that. So that's very interesting.
Yeah, I
Travis, you want to add?
Yeah, Murat, I don't think it's just the purview of Europe. I think this is going to be a global phenomenon.
Sure.
It'll be a global phenomenon.
Sure. I fully agree. Yes. Travis, do you want to add anything about the questions until now?
Well, there's been a general theme emerging from, at least 5 to 7 questions about the bailouts, and there was also a question about prioritizing certain industries. I think that's a terrific question. Those series of questions that, if you poll economists and policymakers, I think most would come down on the side of yes, some sort of bailout is going to be required for particularly the national security or health security industries. There may be more, dissension and debate about whether government and taxpayers should be bailing out luxury cruises, for example. So I think we can draw a line of distinction among, again, the types of industries, the interconnectedness, the value added of that industry. And I don't want to speak badly about the luxury cruises. They're wonderful, but that might be a little bit harder, right, to push that through if, given the fiscal constraints. But if you look at the airlines, right, look at the airline industry. In the United States, that was part of the USA CARES Act, is the airlines are going to get a lot of help, billions of dollars. My position on this is that, again, government should step in and try to assist when there's some sort of exogenous shock to the system. The exogenous shock is not equal across the board to all industries. So it makes sense that there might be some variable responses depending on the type of industry and multiplier effects, and as again, national and health security. I think it's critical that governments take a stand, though, for taxpayers and include covenants, required covenants for firms and industries that receive taxpayer money. Okay, so if you're not familiar with this, the idea of a covenant would be certain requirements that are contractually obligated of the firm receiving the money, that they cannot, for example, buy back stock. They cannot just enrich the board of directors, but there has to be clear, well codified, audited requirements that you're going to keep your workers on hand. You're going to keep paying people. And why not use this was brought up. I think Rehan showed some data about the increasing inequality. There's been some discussion of why not use covenants as a way to allow average taxpayer Joe to, if a loan is going to be extended and a lifeline is going to be extended to a company, then in return, maybe that taxpayer ultimately is going to enjoy a small share of ownership of that company. Okay, if the company elects not to take that lifeline, that's completely fine. It's within their right. If they have wonderful cash flow, if they have a sound model, they don't need that government intervention. They don't have the responsibilities associated with it. But please, I just beg governments around the world, don't give out just throwing money in bailouts with some sort of a restrictive covenant.
Okay, it's very interesting. It's very interesting because the governments are giving out money, for sure, free money right now. Of course, with the good intention in general, but whether the economic and social impact will be positive, we will see. And actually, what you have said made me think that one of the positive impact of COVID would be a lot of more academic research about all these issues will come. So COVID gives us a lot of actually clues about thinking and writing about new things. So let me continue. Thank you. Let me continue just to finish the comments. Korhan Gümüştekin, he's from OSTİM. Hasibe Aysan from us, from OSTİM Technical University. Luke Boyle says something again interesting. He says, urbanization, will people want to live in a busy, packed city anymore? People in low density population regions are better off now. So actually this is interesting because yes, this kind of pandemic, against which even the most powerful states and budgets of the world cannot do much, given this experience, people may change even the way they are living, and the urbanization trends may go back. This is very interesting. Carlos Nietzsche, he congratulates. And Luke Boyle asks about artificial intelligence. Reyhan may talk about that. I can add robotification. I personally think that that is now the most, let's say, winning sector right now will be the robot sector, and every country, even the developing ones, will try to develop that sector for sure. Mehmet Can Turkey asked, could you please zoom in the document? Okay, we cannot do that. We couldn't do it technologically, sorry. Jonah Shehu, from which country I don't know, but he or she congratulates. Murat Turgut, he asks, how about retired people living in crowded cities? Shall we make them go to their own cities? Yeah, that is a phenomenon in at least this part of the world where people are quite mobile. They move from one city to another to find employment. And then when they retire, in most cases, they remain in their own city, just visiting their cities, their parents from time to time. So he's asking about that. So this is, again, something about the urbanization. There's another congratulation. Professor Mustafa Acar congratulates. Sympios Activite congratulates. So Professor Ömer Ca, his comment, it seems to me that in order to give solution, a new economic mindset that has to do with a bill of economic etiquettes will be needed, but make COVID-19 play a positive role, telling the filthy rich, I guess, that we are all vulnerable. So this, I think, is again, Reyhan or any of you can take this. Luke Boyle, yes, precious metals is a good investment. Gold price doing very good. We know why gold is doing very well, because uncertainty is going up. Ahmet Yücel is asking, in addition to AI and technology companies, how about growth opportunities for biotech and pharmaceutical? Reyhan, this is for you. Ece Umay congratulates. Kerem Kızıltunç, he is an IT person from Turkey. There is speculation that COVID-19 will trigger the emergence of the sixth Kondratiev wave, and will it be on healthcare and biotech? And we will leave information technology age behind. Comments. So he is asking if in the sixth Kondratiev wave that we may go into, will the healthcare and biotech sectors be the winning sectors, and information technology will go down? This is an intriguing question. So all of you can take it. Yes.
Murat, given my old age, I'm going to lose track of how many questions there are. Can I answer a few of the salient questions, and then we can
Yes.
keep going through the list?
Yes, go ahead.
So with regards to urbanization,
go ahead. Thank you for reminding.
Yeah, no, we're not as young as we used to be when we first met. But with regards to urbanization, it was something we commented earlier that this trend towards urbanization will start to reverse itself. There's a desperate view, at least right now, maybe temporary in New York, for rentals outside of New York City, and the rental market has gone through the roof in areas 30 to 50 miles away. But I think this is kind of hit into the fact that when families have young children, they were before relocating to urban areas. They may now, for the sake of the quality of life, having been with their children for a long time, to move back out. The elderly in New York City were hit very hard by the pandemic, and that may require more long-term social isolation. I don't want to say social isolation permanently, but in a safer area for the elderly that they're taken care of in suburban type of retirement homes. So I think that this trend will reverse itself for at least 3 or 4 to 5, 6 years, as long as the memory of the pandemic stays. And there could be other mutations of the virus where the second and third wave may not just be the end of it. And once we have the vaccine, we may need to come out with another vaccine. With regards to the question about biotech overtaking healthcare, I actually think both will explode, because if you look at
we lost Reyhan before he comes. Gabriel, Travis, do you want to answer the questions? Okay, Reyhan is back, I think.
Yep.
Reyhan, are you with us?
I'm with you, yes.
Yes.
So
yeah,
just
did you finish or?
Well, just one thing I want to say is that now, if you look at biotech and medicine, it's becoming increasingly individualized, and that's due to the scientific developments. But you also have to realize now, with the amount of data we're generating is so massive and significant that no one human mind or a group of humans can actually analyze it. So big data combined with biotech, combined with all the data now being developed to track COVID-19, will result in an enormous intersection at the combination of AI with healthcare. And there's a group run by some really bright guys here in New York, Kirk and Jan, who I work with. We're at the intersection of artificial intelligence as well as with healthcare. So I think it actually enhances both. There's a convergence that will explode on the upside, and that could be a super cycle for investment that is not yet recognized. So I appreciate the question from the audience. I'm done, Murat.
Okay, thank you. Gabriel, Travis, would you like to take the same set of questions? Do you want to say anything about them? Urbanization and healthcare and biotech, whether the information technology age is behind, anything about these?
Gabriel?
If not,
Yes,
you have to say something, because I will continue with other questions, although I'm sure I will not be able to finish them because there are so many of them.
No, just as regards urbanization, well, the actual situation perhaps in Argentina is that we have a very strong quarantine policy here. I'm at home I've been at home for the last 35 days now. And the government is progressively relaxing quarantine, but just for small towns and small cities, but not for large cities like Buenos Aires that has 12 million people, and other big cities will not see relaxing in quarantine for a long period, I think.
Okay, Travis.
If I could I address a different question?
Sure.
I noted on my last slide when I was talking about the polarization of the political system. I don't believe that can be overstated in many countries, not just the United States. And so I was reading one of the questions, or a comment here actually, from one of the viewers. Abby Shah said, the pandemic is primarily an agenda to demolish the middle class and bring about large corporations inadvertently having a huge impact and more control and less freedom for us all. So that's an example of that libertarian response that I talked about in my presentation. And I think it's very dangerous if we just kind of push that notion kind of under the rug. There's a lot of people around the world that think in that manner, and I don't think governments and population should neglect that. The urbanization one is fascinating, but I would just reiterate what the colleagues have said today about that. So, Murat, do you want to go to the next question?
Yes, thank you. Now, there are a lot of fascinating questions, but now we are over with our time. And I have to skip so many questions, so many other remarks. I am very sorry that we couldn't address them. Because again, we are now out of time, but the questions here, we can look at them. Maybe we can spare them for the next COVID web panel with you, or maybe with other speakers. So I thank all of the speakers. I thank all of the audience, and also all the comment makers. Again, I am seeing all of them. We'll try to address them at another opportunity. We thank them all. And let me now close this session, because again, it is now 2 hours. I thank everyone. Would you like to have any last comment or any final remarks?
I just wanted to thank you, Dr. Taylor, Dr. Baczynski, and of course, Dr. Murat for hosting this. It's an honor to have been on the panel.
Yes, go ahead.
Oh, no, please.
You know, this is the best part of globalization, right? The best part of globalization and digital technology is coming together.
Yeah.
Right, to improve the world, improve people's lives, talk about these important issues as part of humanity. So yes, we face a lot of challenges, but I am optimistic about the future, and great to meet some new friends today as well. So thank you for organizing this.
Thank you very much. For me, it has been an excellent experience. A fascinating experience, and thank you all for the time and for the participation, and thank you.
Okay, thank you. So I look forward to another occasion to talk to all of you. And by the way, the organization of a very nice international conference in Buenos Aires, Gabriel was an organizer, but they had to postpone it by almost 1 year, which is very bad, because that would be a good opportunity for me to go back to that nice country again and visit Tigre as well, not only Buenos Aires. But yeah. hopefully we'll get through all this properly, and we'll meet physically, and maybe with our audience as well at some point. Thank you very much.
I hope so. Thank you.
Take care, everyone.